Right. Welcome to the first answer discussion session of the mock exam series for 2026 advanced levels. So this is the first mock exam, and in this session, we will be focusing on the multiple choice paper and trying to get through the answers and discuss the questions of the 50 MCQs. Right. So with that, without taking any more of our time, let me get started by sharing the MCQ paper. So I've done up the questions. So we'll quickly go through the answers, and certain questions I will explain a bit. Some of the other questions where the answer is pretty straightforward, we'll focus on them quickly. Okay? Right. So, right. Hopefully you can see the paper by now. Right. So, question one, identify the positive microeconomic statement among the statements presented below, right? The microeconomic statement, right? So, basically, we have chosen answer 5 for this because it talks about a specific product. It talks about a specific product. So, a specific market, that is the market for tea. So, it's microeconomics. And also, it is a statement in positive in nature, positive statement, because when we say the export market for Ceylon tea has sharply deteriorated in recent years, we can look at how much we have exported tea in recent times with actual data, actual evidence, and we can prove or disprove that statement, which is a positive statement, which is an objective statement. So correct answer number 1, right? Then question 2, the use if the use of resources involves an opportunity cost, then, so there I have chosen the answer as number 2, all wants cannot be satisfied. Okay, all wants cannot be satisfied. Why? Because if there is a certain, we say, uh, opportunity cost is created if resources are scarce, and such scarce resources have alternative uses when we make a choice. So, opportunity cost, the origin of opportunity cost or the base for opportunity cost is relative scarcity of resources with alternative uses, which means we can't satisfy all our wants. Even if we attempt to do so, we will not be successful as we have scarcity of resources. Thus, we come to the conclusion that all wants cannot be satisfied. Okay? Answer number 1 for question number 2. Question number 3, land as a factor of production in economics includes all of the following except. So, number 3, Port City Island in Colombo, it's human made, it's not, okay? It's human made and it is not natural in nature. Land is all natural resources that are used within the production process. All natural resources that are used within the production process. Okay? So all the other answers, Singaraja Forest, schools of fish in the deep ocean, a gem deposit in Ratnapura, not a gem mine, the gem deposit in Ratnapura, then a natural waterfall, all of these are basically natural resources, whereas the port city is a human-made capital asset. Number 4, an economy unable to increase the output of one product without decreasing the output of the other product, while at the current production combination, not nations, combination, difference between the marginal benefit and cost is zero. That means marginal benefit equals marginal cost, right? As I have illustrated there, we have achieved both productive and allocative efficiency. The end result of that is we have achieved economic efficiency. Correct answer number 5. Correct answer number 5. Okay. Right. So I'm going through these questions quickly because I feel it's not that difficult for you guys to eliminate the other answers and end up with the correct answer. Okay. Question 5. In the following diagram, a shift of PPF results in a movement from point D to point A. So you can see the curve has shifted and we have gone from point D to point A. That's, as I've indicated with the arrow there, inward shift. That's a inward shift. So what could, then I'm asking, may not be indicated or representing. So what is not an indication, what is not an indication, what is not representing an inward shift is the question. Answers are economic growth. Economic growth creates an outward shift. And number 4, improvement in the economy's productive potential. Then also there is an outward shift. So basically number 4 is again talking about economic growth. So whether it's economic growth or improvement in the production potential, outward shift, not an inward shift. So therefore 1 and 4 should be in the correct answer. Answer number 2. Answer number 2. An advantage of a command economy is that. An advantage of a command economy is that. Okay. So I've chosen answer number 2 for question 6. Social costs and benefits will be considered in resource allocation, especially for merit goods, things like education, healthcare. In a market economic system, markets, we always compare the command economy with a market economic system when looking at the advantages and the disadvantages. In other words, when evaluating a command economic system, it is done relative to or compared to a market economy. In a market economy, we have learned in unit 8, we talked about this, where we learned that markets make decisions, private sector producers make decisions, consumers individually make decisions based on private benefit, private cost, and does not consider external benefit, external cost. Therefore, merit goods are underproduced below the socially optimum level and demerit goods are overproduced above the socially optimum level. That's what we call market failure. So in a command economy, we believe such externalities based overproduction, underproduction, market failures could be minimized to a certain extent because the government will also consider the impact on the greater society in addition to the individual, in addition to the private benefit, private cost. Answer number 2, question 6. Question 7. When explaining as to why a demand curve for a normal good is fundamentally negatively sloped based on the price effect, when we explain the law of demand based on the price effect, all of the following are subject to ceteris paribus assumption, except all of the following are held constant, except what? Correct response or answer is number 3. Relative price and real income of consumers. Relative price and real income of consumers. Why? If relative price doesn't change, price of the good changes, then price of substitutes, price of complementary goods are held constant. But when the price of the good changes in comparison to price of substitute goods, the relative price of the good either has increased or decreased, which is the substitution effect. We can't explain price effect without a substitution effect. So relative price is not held constant. Real income, nominal income is held constant. Money income is held constant, but not the real income. That is income effect. So correct answer is number 3. Okay, it talks about the substitution effect and income effect, which combined explains the price effect. Right, I have illustrated that there also change in price will cause a change in relative price and a change in real income. Question number 8. Due to the increase in import duties on vehicles, the price of small vehicles, that is engine capacity less than 1000 cc, within the domestic market has increased by 15%. Okay, and the demand for such cars by middle income earning households has increased by 25%, and 18% by high income earning households. Identify the conclusion which can be derived upon considering these changes. Remember, import duties, uh, small vehicles within the domestic market has increased by 15%, right? So the import duty has been increased by 15%, right? So that can mean that the price of cars, as I've illustrated there, price of cars increased by 15%. Middle income earners demand increases by, so price of cars within the domestic market has increased. Yeah. The demand by the middle income earners has decreased by 25%, and the high income earners has decreased by 18%. So if you compare these, both are elastic because both are more than 15%. Both are more than change in quantity demanded, or percentage change in quantity demanded is more than the percentage change in price. So whether it's middle income earners or high income earners, their demand for small engine cars is the demand for small engine cars is elastic, right? But the middle income earners demand is more elastic than high income earners, relatively more elastic. Why? Because middle income earners respond by decreasing demand by 25%, high income earners respond only by decreasing demand by 18%. So the correct answer is number 5. The demand made by both middle and high income earners for these cars is elastic. If there was an option, if there was an answer that says middle income earners are relatively more elastic than the high income earners, that answer would be perfectly correct. But such an answer does not exist. The only conclusion we can reach, correct conclusion, is that both middle income earners and high income earners demand for small vehicles or cars with small engines is elastic. Is elastic. Correct? Correct answer is number 5. Question number 9. Question number 9. In the competitive market for product A, which of the following events could explain expansion of supply? Remember, expansion of supply is another way to say increase in quantity supply. Expansion of supply is not a shift, as I mentioned there. It's not a shift. It's simply an increase in quantity supply. Increase in quantity supply. So the answer chosen is number 5, a sharp increase in the disposable income of consumers of product A. When the disposable income of consumers of product A increases, we believe demand for product A will increase. When the demand increases, price increases. When the price increases, quantity supplied increases. I have explained with the diagram also. Okay? Answers 1 to 4 talk about things that will cause a shift of the supply curve, right? And number 4 looks at the change in price in the opposite direction. We want an increase in price, not a decrease in price. So the correct answer, right? And also, if you look at option number 2, decrease in the price of product B, which consumers of product A consider as substitute. Then the demand will decrease. We need the demand to increase. So you can eliminate each answer that way. Question 10. All of the following causes a leftward shift of the market demand curve for a normal good, except which one? Leftward shift, except which one? So leftward shift means other factors affecting demand has to change, not the price. Okay? Right. So correct answer is chosen as number 3, an increase in the price of the good itself, because we are looking for what will not create the leftward shift. Answer 1 talks about substitute prices. Increase in the price of substitute prices will leftward shift of the market demand curve for a normal good, except which one? Right. Decrease in the price of substitute goods will decrease demand. A sharp decrease in consumer income will decrease demand. Number 4, an increase in the price of a complement will decrease demand. Number 5, a decrease in the number of market consumers will decrease market demand. So the correct answer is number 3, because the other 4 actually decrease market demand, and number 3 talks about the price. Change in price is change in quantity demanded, not shift of the demand curve. Correct answer number 3. Question 11. If the market price of an inferior good rises while all other factors held constant, consumers shall demand inferior good. When the market price rises, what happens? Basically, consumers shall demand less, right? Even inferior goods are according to law of demand. What is changing here is price, right? So why are inferior goods according to law of demand? Not because of income effect, no, but the income effect goes against the law of demand for inferior goods. Inferior goods are according to the law of demand, not because of the income effect, negative income effect. No, it's because of the negative substitution effect. And the substitution effect is not only supporting law of demand, it's more powerful or dominant than the income effect. So the correct answer is number 2. Correct answer is number 2. Less, since the substitution effect dominates the income effect. Correct answer number 2. That's why inferior goods are according to law of demand. And that's why a special type of inferior goods called Giffen goods are against law of demand, is because the income effect dominates the substitution effect. Here correct answer is number 2. Question 12. What is the correct combination of characteristics which indicates a given good? Okay. So given good, PED has to be positive. PED has to be positive. So it could be answers 1, it could be answer 2, it could be answer 4. Okay. We can't really say whether it's elastic or inelastic. We only can say PED is positive. We can't say more than 1, less than 1 exactly. Income elasticity of demand has to be negative, because all given goods are inferior goods. All given goods are inferior goods. So answer number 2. But there's another answer that says positive PED, negative YED. The problem with that answer is answer 4. The issue is it says downward sloping demand curve. Inferior goods go against the law of demand. So upward sloping demand curve. Answer number 2. Answer number 2. The market supply of a given product is represented by QS equals minus 40 plus 5P. Which statement correctly describes the price elasticity of supply along this curve? Minus 40 means it's as I've illustrated with the diagram there, it's a elastic supply curve. On an elastic supply curve, as price and quantity increase, or when we move upwards from one point to another, upwards along an elastic supply curve, the PES coefficient will always be more than 1 but keep diminishing. More than 1 but keep diminishing. Therefore, correct answer is number 1. We have learned the specific tools for this in the MCQ Toolbox workshop series. And you guys have this specific theoretical knowledge as well. Okay. Question, so 13, answer number 1. 14. If a market, in a market which is generally a stable equilibrium, at the current price, there is a surplus of the product. Stable equilibrium meaning a market, whenever it goes into disequilibrium, it could be an excess supply disequilibrium, such as in this case, or it could be an excess demand disequilibrium with a shortage, right? It doesn't matter. If a market has a stable equilibrium, whenever it goes to disequilibrium, it quickly comes back to equilibrium. Whenever the market goes to disequilibrium, it quickly comes back to equilibrium, right? Through the invisible hand of the price mechanism, or through the process called the price mechanism. Whenever market is having a surplus, that means an excess supply, that means the price in the market is above or higher than the equilibrium price. Always a surplus is created. I have shown that on the side of the question. P, whatever the price in the market, is greater than the PE, equilibrium price. So if the market wants to come to equilibrium, price should start to decrease. As price starts to decrease, as price mechanism applies decreasing pressure on price, what will happen is quantity demanded will start to increase, quantity supplied will start to decrease. Okay, so price has to decrease, quantity demanded will increase, quantity supplied will decrease, solving the surplus and bringing the market to equilibrium. Okay, how QD and QS react? It's according to law of demand and law of supply. When price decreases, QD will increase. When price decreases, QS will decrease. Thus, solving the surplus and bringing the market to equilibrium. Correct answer number 4. 15. In which of the following forms of government market interventions lead to allocative inefficiency where marginal benefit of the product exceeds the marginal cost? So you ask for a specific situation of allocative inefficiency or a deadweight loss created where we have marginal benefit is more than the marginal cost. So the diagram I am illustrating, marginal benefit will be more than marginal cost. That is, we will meet the supply curve and then the demand curve. Okay, here we will meet the supply curve, right? And then after the demand curve, as I have shown in the diagram, is when we are on the left hand side of the free market equilibrium. That means we are underproducing. Only when you underproduce, you will have marginal benefit greater than marginal cost at a underproduction quantity. So underproduction happens when producers are discouraged. One thing that will discourage producers is price ceilings. Another thing that will, because they can't sell at the price they want, they're forced to sell at a lower price. Another thing that will discourage production is indirect taxes. So correct answer number 3. Correct answer number 3. Question 15. Question 16. The diagram shows the market situation after a government enforces a price floor and supports it by purchasing the essential market surplus, meaning unavoidable market surplus. Which area represents deadweight loss and social welfare loss? So deadweight loss is clearly area C, right? The triangle that is formed when we produce at Q2 or when we produce and sell at Q2. You can see as we go along the Q2 quantity line, here you will have the marginal benefit and here you will have the marginal cost. Marginal cost is more than marginal benefit. Then we have allocative inefficiency, right? Then we have allocative inefficiency. So point C, area C is there. Okay, that's deadweight loss. Then with the social welfare losses, that social welfare loss should include deadweight loss. So it's deadweight loss is a triangular area. Okay, deadweight loss is a triangular area, right? Okay, let me just show it here. Deadweight loss is this kind of a triangular area, right? This kind of a triangular area. But okay, I'll show it here itself. Right. Deadweight loss is the triangle. But when it comes to social welfare loss, it's what we call a M-shaped area. Right? So it basically goes like that. Right? The green color M-shaped area. So without E, rest of the government expenditure to buy the excess supply. Right? If I complete it this way, right, the box that is green color is the government's expenditure to purchase the excess supply. Right? The M-shaped area that is green color, okay, if I remove this now, M-shaped area that is green color is basically the social welfare loss. So correct answer number 4. Correct answer is number 4. Question 17. Okay, question 17. The supply equation of a certain market is QS equals minus 10 plus 4P and the market clearing price is rupees 10. While the government enforces a rupees 10 unit tax on sellers, estimate the producer surplus before the government intervention and supply equation after. Surplus before, equation after. Right. To estimate the surplus, we need producer surplus. We need the minimum supply price. So here you guys can see, right? I've done the first working to find the minimum supply price, which is when quantity supplied is 0, I have applied the shortcut formula and found that the minimum supply price is 2 rupees and 50 cents. Then the equilibrium price is given, that is 10 rupees. So 10 minus 250. Then I need the equilibrium quantity. So what I've done is apply the equilibrium price to the supply equation. So that is what I've done as a second step and found the equilibrium quantity to be 30 units. So 10 minus 250 into 30 divided by 2, I get my what surplus? Producer surplus before the tax. 112 rupees and 50 cents. Producer surplus before the tax. 112 rupees and 50 cents. Then I need the supply equation. So then estimating this is the third step. Then as a fourth step, I've estimated the new supply equation, or we say the tax adjusted supply equation. So the tax adjustment equation is QS equals A plus P minus T. So minus 10 plus 4P, P minus tax is 10 rupees. So basically I've ended up with minus 50 plus 4P. Minus 50 plus 4P. That's the answer here. Okay? Right. So that's QS equals minus 50 plus 4P, 112 rupees and 50 cents. Answer number 5. Answer number 5. Okay? Question 18. You're given a diagram. So there are two supply curves which are proportionate to each other, asymmetric to each other. If the market supply curve has shifted from S1 to S2, S1 to S2 means a rightward shift has happened. Identify the correct combination of developments within this market. Correct combination of developments within this market. I've chosen the fourth answer. Eliminating a proportionate indirect tax on sellers, more benefits to consumers. More benefits to consumers because if it's a tax, whoever is more elastic has to pay more of the tax. But when you remove a tax, it's not a burden, it's a benefit. So benefit goes the other way. Whoever is elastic gets less of the benefit. Whoever is inelastic only gets more of the benefit. Now hold on. Where does this elasticity story come here? Supply curve, both S1 supply curve, S2 supply curve are elastic. when supply is elastic than demand, if it tax, suppliers will pay less tax. But if it's a benefit, removing a tax is equal to a benefit that you get from a subsidy. No? So if it's a benefit, if it's tax, you pay less tax. If it's subsidy or if it's a benefit, you get less benefit also. Less benefit also. That's why I'm concluding that now we have learned a tool for this in the tool MCQ toolbox volume 3, right? We have identified the relationship between elasticity and tax burden and subsidy benefit. Taxes, less burden if you are elastic. Subsidies, less benefit if you are elastic. So again and again I am saying removing a tax, that is negative tax, is basically the effect of a subsidy. And yeah, why do we say proportionate tax? Because the curve is not parallel. The two supply curves are proportionate. That means it's a ad valorem or proportionate percentage tax. Correct answer number 4. 19. Assume the price elasticity of demand for a given commodity is minus 0.75. So inelastic, okay? Right. Price elasticity of supply for the same is 0.50. That means again inelastic. If the government provides a unit production subsidy, how will the ultimate benefit of the subsidy be distributed? Now here both demand and supply are inelastic, but demand is more elastic than supply, 0.75 compared with 0.50. Get it? So here it's 0.50. Here it's 0.75. So demand is more elastic. Remember what we learned about subsidy? What we learned about subsidy is subsidy creates benefits, but if you're more elastic, less benefit. More elastic, less benefit. So who will get less benefit? Demanders will get less benefit. Why? Because demand is elastic, supply is inelastic. Right? Supply is comparatively. Both are inelastic tamai. But if you compare, you will see that supply is more inelastic. So whoever is more inelastic will get more of the subsidy benefit. Whoever is more inelastic will get more of the tax burden. Tax nang burden, subsidy benefit. Correct answer number 2. Correct answer number 2. Question 20. In production theory, the extent of the short run depends on. In production theory, the extent of the short run. Whether we are in the short run or long run, or to how much time we have spent on in the short run. It's not a factor of time. It's not based on calendar time period. It's not months, years. It's about whether at least one of our factors, if it remains fixed, then we are still in the short run. So how quickly you can go from the short run to the long run basically depends on how robustly, how easily, how quickly you can change what factors? Fixed factors. Correct answer number 4. Correct answer number 4. Right. Questions from 21 to 23 are based on this diagram. Okay. 21. Question 19. What's the answer? Answer number 2. Okay. Question 19. Answer number 2. Right. Because supply is inelastic, demand is elastic, then suppliers will get more benefit. Right. So 21, identify the correct combination of production time period and market structure relevant. Right. Production time period is the short run. How do we know it's a short run? Because there's a gap between ATC, AVC. There's a separate curve called AVC and another curve called ATC. That's because there is AFC. The gap or the vertical distance. If I look at, for example, this distance, right? This vertical distance between ATC AFC is, that is, sorry, ATC ABC is, that is AFC. AFC means fixed, average fixed cost. If fixed cost is there, we are still in the what run? Short run. If fixed cost is there, we are in the short run. So we know the time period is short run. Next, market structure. Market structure is perfectly competitive market. Why? This firm is in perfect competition. It's a perfectly competitive firm. Reason? AR equals MR. AR equals MR meaning price taking. Price taking only happens if you are in perfect competition. If you are in perfect competition. Correct answer number 4. Short run, perfect competition. Question 22. Identify the correct combination of conditions experienced by the firm in the price and quantity of output P and Q presented in the schedule given below. P1, Q1. Let's see. P1, Q1. Here. So if the price is P1, that means the average revenue, marginal revenue curves are well above the lowest point of ATC, which means they are having supernormal profits or abnormal profits. Right? Here the answer would be profit making. So it has to be either 1, 3 or 4. 1, 3 or 4. Okay? 2 is eliminated and 5 is eliminated. Then P3, Q3. If you come to P3, Q3, they are not only making losses, economic losses definitely there, and they might even shut down if they go below P3. Okay, so that is shutdown point is there. So then we can eliminate number 1 is eliminated. It's not break even. Number 5 we already eliminated. Number 4. No, number 3 or 4 now. We have narrowed it down to number 3 or 4. Shutdown price is correct. Then P2, Q2, normal profits. Where the AR equals ATC. AR equals ATC meaning average revenue equals average cost. That means zero economic profit. Zero economic profit. Answer number 3. Answer number 3. Okay. Question 23. In which quantity ranges with relevance to average variable cost curve indicated in the schedule below, identify the correct behavior of average physical product, APP, average physical product. So to answer this, 0 to Q3, then beyond Q3, I've used another diagram here. So this basically is the lowest point ABC. Yes, this is basically Q3. Okay, below Q3 can this side. Below Q3, marginal product is above average product. Marginal product is above average product. So what are we looking for? Yes, marginal product is above average product. MPP is above APP. So answer 1 or answer 4 can be correct. Answer 1 or 4 can be correct. Then on this side, that is beyond Q3, on this side, MPP is lower than APP, that changes, and both are downward sloping. APP and MPP are both downward sloping. Both are downward sloping. Yeah, correct answer. We are to talk about average product, no? Yeah, correct answer is number 1. When you are less than Q3, marginal product is above average product. And after Q3, both marginal product and average product are downward sloping. Answer number 1. So the key was this diagram. We learned tools for these also, right? 22, 23, done. 24. Which of the following costs of a manufacturing firm shall exist at zero output and has an imputed value? It's there at zero output and has a what value? Imputed value. Correct answer is number 5. Trans earnings of the entrepreneur. Trans earnings of the entrepreneur the opportunity cost of entrepreneurship. We call it normal profits. Normal profits and amortization payments. Normal profits and amortization payments are two very economic examples of fixed cost. Remember, we are looking for fixed cost. Does it say fixed in the question anywhere? No. But if there's a cost at zero output, then it's a fixed cost. Normal profits is a fixed cost. Amortization payments is a fixed cost. Number 5. There are other examples of fixed cost as well. 25. All sunk costs are fixed cost, but all fixed costs are not sunk cost. Which of the following items affirm this statement, confirm this statement? Answer number 3. Salaries paid to senior managers is a fixed cost. Their salaries are fixed. But it is not a sunk cost because we can recover it. It's not a sunk cost. All sunk costs are fixed cost, but all fixed costs are not sunk cost. 25, answer number 3. 26. Assume a particular firm average revenue AR and price received from the market for every unit sold is identical. AR equals P. Puta, AR and price are always equal. AR and price equaling are not special to perfect competition. Keep that in mind, right? AR equals MR as I have illustrated there. P equals AR is common for any market structure. But AR equals MR is special for perfect competition. So here it could be a monopoly, it could be perfectly competitive, it could be imperfectly competitive. Get it? So answer number 4. It could be any market structure. 27. In which of the following market structures all firms in the market face downward sloping demand curve? All the firms face downward sloping demand curve. Either it's monopoly, perfectly competitive or imperfectly competitive. Again, the focus is not on an individual firm. It says all firms, right? In the market. All firms in the market can. I'm using this as another way to say market demand. Okay, market demand curve. Right. Correct answer number 5. 28. All of the following activities are non-productive in nature and thus excluded from GDP estimations of a country, except which one? Correct answer number 1, on account production. On account production is included in the GDP. It is not excluded from the GDP, right? Now, for example, the part of the harvest that is retained by a farmer for his or her consumption is included in the GDP. We give an implicit value and try to include it, right? On account production is included. Trading bonds, buying and selling real assets, value of goods in second-hand transactions, intermediate goods and services. All of these do not have value addition, and intermediate goods and services are minused from gross value of output to calculate value addition. 29. As per the CBSL disaggregation, gross value added at basic price based on the income approach shall consist of the following. So the correct formula is number 5. Compensation of employees, gross operating surplus, gross mixed income, other taxes, less subsidies on production. Why should we take only other taxes? Why can't we take taxes on production minus subsidies on production? Reason is we are not estimating at market price. Reason is we are estimating at basic price. Therefore, the correct answer is not the first one, but the 5th one, because it should be at basic price. First one will give us the answer at market price. 30. The sum of gross domestic fixed capital formulation export value of visible, invisible trade minus import value of invisible, import value of the same. Stock of all unsold goods and intermediate goods and acquisition less disposal of valuables during a specific period of time. Basically, sum of gross domestic fixed capital formulation, export value of visible, invisible. So basically, IF plus CII, acquisition minus disposal plus net taxes. So basically, domestic savings. I've explained with the formula there. Within brackets is the I component. Then net exports. I plus net exports is another way to estimate domestic savings. You carefully read, then you can get the answer. Domestic savings. Right. Which of the 31, which of the following statements on macroeconomic equilibrium is theoretically incorrect? Theoretically incorrect. Number 3, when the economy is in a state of equilibrium, the economy is essentially at its potential level of gross domestic product. That's wrong, because the statement is saying YE, that is equilibrium level of national income, and full employment level of national income output are always the same. That is not true. Sometimes those values can be the same. Sometimes equilibrium level of national income, that is the actual output of the economy, could be higher or could be lower than the potential. That's why that statement is wrong. 32. For an economy with household, private firms, government, and who trades with the rest of the world, so full economy, the macroeconomic equilibrium condition is, I've gone with the fifth answer, S plus NT plus M, that is savings, net taxes, imports equals investments, government purchases, exports. What is this, Sudha? Basically, withdrawals equal injections. Withdrawal equals injections. Okay? 33. An inflationary gap in relation to the full employment equilibrium level of equilibrium output is created in a situation. What creates an inflationary gap? Basically, when the aggregate demand goes beyond the level of aggregate supply at potential, or we can say long run aggregate supply, if not the full employment aggregate supply. Basically, if demand is more than aggregate demand is going beyond the potential output of the country, then we can't produce at that level. The economy starts to overheat. The result of that is demand pull inflation. That's why we call this an inflationary output gap. Answer number 4. Okay. So these inflationary gaps, deflationary gaps, output gaps, expenditure gaps, you have to be very clear with these things. Okay. So in unit 6, there's a separate material I have given just to explain these gaps and how the diagrams are shown and things like that. Yeah, correct. Okay. 34. The consumption function of a hypothetical economy is C equals 200 plus 0.6y. Identify the correct combination of the following aggregate, marginal and average concepts as the national income level increases with regards to this economy. Okay. First of all, marginal means the slope of the marginal propensity to consume means slope of the consumption curve. Marginal propensity to save is the slope of the savings curve or function. Remember, whether it's a consumption function or curve, savings function or curve, they are linear, they are straight line. On a straight line curve, the slope does not change. In other words, MPC, MPS values constant. MPC, MPS values are constant. Then what is the relationship between APC and income? APC and income, negative relationship. We will learn all of this in the tools, and in your respective rapid macro classes, we have learned these things as well. income, national income and average propensity to consume, negative relationship. So when income increases, APC decreases. APS and income positive relationship. Income increases, APS increases. Correct answer number 3. Once you learn the tools, this becomes very easy also. 35. In a certain economy, if autonomous investment expenditure increases by 500 million and government purchases by 1300 million, if induced consumption is 4/5 of income, that's basically 1/5 is 20%, 4 කියන්නේ 80%. So basically, induced consumption කියන්නේ marginal propensity to consume is 80%. 80% කියන්නේ 0.80. Okay, that's what we are given. What will the total growth in the national income? So two things increase, I and G. So I increases by 500. If you can find the multiplier, how do you find the multiplier? 1 over 1 minus MPC. 1 minus MPC is basically MPS. So 1 minus 0.8, 0.2, 1 divided by 0.2 is 5. So the first thing I've done is found the multiplier, 5. So once I find the multiplier, I apply the multiplier to the investment change and the government purchases change. 500 into 5, 1200 into 5. So the net result of this is I end up with 9,000. Correct answer number 5. Correct answer number 5. 36. Which of the following functions of money is immediate and most significant affected by high inflation rate? Which function of money is first and most affected by, immediately and most affected by, basically store of value? Because when we save our wealth in the form of money, we are always focused on the inflation rate, because when the inflation rate starts to increase, purchasing power of our money starts to decrease. So there is no point in keeping money in banks. It's better to, soon as possible, spend the money on goods and services, because in times of high inflation, what goods and services you can buy today would be lesser what you can buy tomorrow. So better buy today. So don't save but spend. Store value becomes less attractive with inflation. And it's the first thing we give up as a function with high inflation. So 36, number 2. 37. Which of the following is an example of speculative demand for money? Speculative demand for money is where you keep currency or cash balances or money in demand deposits. In other words, perfectly liquid form of money with the expectation of bond prices, the price of financial assets changing in such a way where you can get a capital gain, where you can buy at a lesser price, keep and sell at a higher price, capital gain. So that's called speculative demand. It comes from the store value function of money. So here the correct answer would be number 3, money held for investment and security and equity. So answer number 3. Basically, the investment is the purpose there. Why answer number 5 is incorrect is because it says invested. Demand is always something to be done, not something already done. In other words, this is demand for money means the money in the form of liquid money, that is cash or demand deposit balances, you're keeping with you with the intention of or intending to spend on goods and services. Planned expenditure non transaction demand, unplanned expenditure precautionary demand, and future investments non, not invested but hoping to invest non, that is called speculative. Get it? Right. 37. Answer number 3. 38. Demand deposit balances, cash checks, time and savings deposits are respectively which type of money? Demand deposit is bank money. Cash check, demand deposit is bank money. Cash check is money substitute. Time and savings deposit is near money. So bank money, money substitute, near money or quasi money also works. Near and quasi same thing, no? So answer number 2. Answer number 2. 39. Within a hypothetical economy, the money supply is 110 million. The cash ratio is 10%. Cash ratio is 10%. The currency balance within the banking system are 10 million. If the banking system has granted loans of 90 million, what is the amount of currency held by the public? We have to find the CP, currency with the public. Okay, I put the information given into a balance sheet. Deposits are 100. Okay. Now, they don't directly say deposits are 100, but we know deposits are 100. Why? Because money supply is 110. Out of that, 10 million is 10%. The currency balances with the banking system are 10 million, right? So that means Federal Reserve ratio is 10% now. 10% of 100 is 10. So if you keep 10 as reserves, the balance 90 is given as loans. So 10 plus 90, 100. That means deposit should be 100. So added the asset side and found the liability side, that is deposits are 100. We need deposit value because money supply is currency with the public plus demand deposits. Now we found demand deposits as 100. Money supply is 110. Out of that 110, if demand deposits are 100, 100 minus 110, the remaining amount is currency with the public. Remaining amount is currency with the public. Is that clear? So the correct answer is number 2. Correct answer is number 2. 40. Assume that one of the commercial banks in the banking system has excess reserves of 800 million and Saturn reserve ratio is 20%. One bank, okay? Meanwhile, a customer of this bank deposits 50 million in his current account and the bank lends 240 million to another customer. How much additional lending can be granted by this bank? After all this is done, if you can find the excess reserve, your answer is found. They had 800 already. Someone came and deposited 50. 800 plus 50. 850 is now what they had. Out of that 850, 240 was withdrawn. 240 was withdrawn. Okay? Right. So if 240 is withdrawn, lens, yeah. So minus 240. Not only that, out of this 850, now they got a 50 million deposit, no? Out of that 50 million deposit, 20% they can't give on loans. 20% is to be kept as reserves. Right? So if you adjust the 50 million they got to 20%, that's the total deduction. So 800 plus 50, 850 minus 240. Yeah, minus 240. So then 20% of 50 is 10. So that's 250. So 850 minus 250, they get 600. 600 is what they can give out on loans. If that method is confusing, what you can do is you can basically take the total deposits at 850, right? And then minus the 240. Okay? Minus the 240. And remember, they have to keep, for that 50 million, they have to keep 10 as required reserve. So from that will be 610. From the 610 minus 10, then again you end up with 600. The idea is to know, the important thing is to remember that 50 million they got as deposits, the entire 50 they cannot give out on loans. Out of that 50, they have to keep 20% in terms of the value, 10 million as reserves. So that if you don't account for that, only you will get the incorrect answer. You'll get the answer as 610, which is wrong. It should be 600. Number 5. Okay. 240 anyway you have to deduct because you're given that as loans already. Right. There are a few ways to get to the 600. Okay. Right. 41. Suppose the amount of reserves in the commercial banking system equals, now remember in question 40 you don't need to multiply because it's a single bank. Okay. Right. Commercial banking system is rupees 400 million. The amount of deposits equal to rupees 2400 billion. 400 billion, 2400 billion, and the amount of currency held by the public is 600 billion. Under these circumstances, the money multiplier would equal money multiplier. Shall we? So how do we calculate the money multiplier? I've shown the calculation step by step here. So as you guys know, money multiplier simple M is capital M divided by H. Capital M is money supply. Money supply is always narrow money, CP plus DDP. CP is given as 600. Demand deposits of the public in commercial banks are given as 2,400. So 600 plus 2,400, that is the money supply, divided by high-powered money. High-powered money components are currency with the public 600. Then how much money commercial banks keep as reserves? That means the money they keep at the central bank. That is 400. 600 plus 400,000. So 3,000 divided by 1,000, we end up with 3. End up with 3. Correct answer number 2 for 41. 42. When other factors remain constant, what will cause a reduction in the stock of money? Stock of money is another way to say money supply. Stock of money is another way to say, monetary aggregates is another way to say money supply. Monetary aggregates, stock of money, all mean money supply. What will cause a reduction in the money supply would be number 3. An increase in the public's desired ratio of cash to bank deposits. That means people withdraw money and keep as cash. People withdraw from deposits and keep as cash. Banking system, commercial banking system will have less money, will have less excess reserves, will have less credit creation or multiple deposit multiplication ability. That means money supply will be lesser, reducing. 43. Inflation caused by the demand side factors tend to persist because. Why is inflation caused by demand side factors? Why does it tend to drag on, persist? Mainly because if we keep increasing the money supply. Money supply is the main culprit behind sharp increases in aggregate demand, pulling up prices, which means demand pull inflation. Answer number 1. 44. Which of the following is not a reason leading to market failure as caused by inefficiency of resource allocation? If it's caused by inefficiency of resource allocation, and that's what we ideally call market failure, the broader concept is suboptimal performance of the market system or the market system failure. Market system failure is what happens due to 3 I's. Inefficiency in resource allocation, inequality in income wealth distribution, macroeconomic instability. The 3 I's. Here, we are talking about inefficiency in resource allocation. Then number 3, inequalities in income distribution is not a reason for that. It is a reason for market system failure, but not a reason for market failure caused by inefficiencies in resource allocation. Answer number 3. 45. The information given below shows benefits and costs of a newly established TV station. Okay. I think to answer the question, we should identify the social cost and social benefit of this TV station. So social cost is PC plus EC, that is private cost plus external cost. Social benefit is PB plus EB, private benefit plus external benefit. So 120 plus 40, 160 is the social cost. 140 plus 30, 170 is the social benefit. Social benefit overrides the social cost. It's more than the social cost. Correct answer number 4. Correct answer number 4. 46. In the context of a free market producing a merit good, which of the following must be true at the market equilibrium? This is a very popular format question in your paper. In the toolbox discussions also, we have done this kind of questions few times. Right. So if a merit good, in terms of a merit good, social benefits are greater than the private benefits. Right. I've explained it with a diagram as well. And I'm trying to tell you guys that the question can be taken further and they can ask you something like marginal social benefit being greater than the marginal social cost. Get it? The triangle part, the deadweight loss area also can be tested, even though it's not tested in this question. In this question, the correct answer is number 2 simply. Because you have an external benefit, the social benefit is a bigger value than the private benefit. Answer number 2, 46. 47. The single largest contributing item of the government of Sri Lanka's total revenue for the financial year 2023. For the financial year 2023, for this question, the correct answer is VAT, value added tax. Okay, so I think in the grid I've given it correctly. 47, it should be 1, not 2. Okay. Value added taxes. Value added taxes. Okay, this is based on statistics. And this is for 24. Right? Okay, VAT, value added tax. 48. Given below is the budgetary information with regards to a hypothetical economy relevant to the financial year 2023, ideally 24. Hi. You asked for 2 things, current account balance, primary account balance. Let me explain the steps. Okay. First, to estimate the current account balance, you need to take the total government tax revenue and non-tax revenue. You don't take grants, okay? For current account, we don't take grants. So we take the 500 here, right? That's taken. And the 200 of non-tax income is taken. Okay? No, this is total revenue. I'll go here. Okay. First thing. Tax revenue, non-tax revenue, 700 is the total revenue, tax and non-tax. From that you minus current expenditure in this item. Okay, current expenditure you minus, that's 730. 700 minus 730 minus 30 is the current account balance, minus 30. So correct answer can be either 1 or 4. Others are eliminated. It's either 1 or 4. Next, primary account balance. Primary account balance is total government revenue plus grants minus total government expenditure but without interest payments. Okay, so let's do it here. Ready? So tax revenue, non-tax revenue, grants. 870 is total government revenue plus grants. Less take current expenditure 730. Okay. Then take capital expenditure, net lendings 530. All expenditure, total expenditure deduct. Once you take 870 and deduct all the expenditure, that is 1260, you end up with 390 minus 390. This is not the answer because this includes deducting interest payments. So add back the interest payments because primary balance should be without interest payments. So this is the key part, interest payments. So add back the interest payments. Got it? Because we inside this 730, inside this 730, we have already deducted the interest, no? So add it back. So minus 390 plus 280, we end up with 110. 110, but minus. So that means the correct answer is answer number 4. Answer number 4. Okay? Done. That's another way. The red color thing is another way to estimate this. Right. 49. Identify the statement which describes the most prudent fiscal policy. What is the most prudent? Okay. I kept the video off for two reasons. One, not to distract you. Number two, to save some bandwidth so that connectivity is there consistently. Okay. 49. Identify the statement which describes the most prudent fiscal policy response with regards to an economy entering the downward phase of its business cycle, representing low levels of macroeconomic resilience. This economy cannot face this on its own. It needs the government to interfere and support it a bit. It's going into a recession. So then the best thing to do is go for counter-cyclical fiscal policy. That means reduce taxes a bit, increase government spending, and give a boost to the economy, give a stimulation to the economy. Answer number 3. Okay. If the economy is resilient, it can fight the recession on its own, but this economy needs support. Which of the following statements best describes the meaning of debt sustainability assessment, sometimes called debt sustainability analysis also, assessment, DSA, as conducted by the GOSL when entering the IMF, International Monetary Fund, EFF, Extended Fund Facility. A lot of abbreviations are there. Right. Correct response is, this is not a theoretical area, so it's a specific thing. Number 1, it is a comprehensive assessment of the government of Sri Lanka's ability to keep paying back its debt now and in the future without major problems. That is the purpose of doing a debt sustainability assessment, a DSA. Correct answer number 1. Right. With that, very quickly, I want to jump into the SAQ paper a bit, right? So I have highlighted a few questions that I think you guys should give a bit more special focus on. All the questions are important, but these questions, a little bit more special focus is good to have. Number 3, question 1, part 3, I'll say it that way. Question 1, part 3. The entire question 2, there's a correction in the answer, one of the answers. I'll do that also in a bit. Entire question number 2. Question 3, part 2. Entire question number 2. Question 3, part 2. Question 3, part 2. Question 4, parts 1 and 3. Question 4, parts 1 and 3. 1 and 3. Question 5, parts 2 and 3. Parts 2 and 3. Question 5, part 2 and 3. Part 2 and 3. Question 6. No, nothing special, but definitely good question to practice. Question 7, part 4. Question 7, part 4. Okay, question 7, part 4. Question 8, the entire question. Question 7, part 4. Question 8, the entire question. All parts are important. Entire question. Okay, very technical question, I agree, but you need to know to get the full marks for the question 6 in subsection B, the money and banking question. Okay, question 8. Then question 10, part 4 and 5. No, sorry, question 10, part 5. Part 4, just that word, you need to know the meaning. Question 10, part 5. Question 10, part 5. It's about the fiscal policy, debt sustainability, primary balance, those things. Very important areas, okay? Question 10, part 5. Right. Then there is a small correction, as I mentioned. So let me adjust that also. Right. In the suggested answer material, for question 2, part 1, question 2, part 2, okay, subpart A. Here, bata, this is correct. No issue with that, right? But when calculating the A component, okay, so 400 equals A minus 240. When crosses over, the 240 becomes plus, ne? It's not 160. This should be 640. Okay, A is 640. Just make that adjustment. So here also it should be 640. 640. Got it? That adjustment is important. Okay? Right. Then let me quickly check something. Yeah. In your suggested answer, I see a small issue. Question 2, MCQ 2, correct answer is number 1. But in the suggested answer, I think it's printed as, sorry, question 5. No, there's a small issue, I think. Let me check again. Question 5, correct answer 2 and 3, 2 and 4. Yeah. I marked it. I marked it correctly. Number 2. Correct answer is number 2. Yeah. Number 2. Let's check this also once. Number 5. Correct answer should be yes. Number 5. Number 5. Correct answer is number 2. So when we mark, sometimes we might have marked for that, right? Because I only saw this now. So please adjust in your answer grid. 5 correct answer is number 2, not number 1. Okay, 5 correct answers, number 2. Right. So with that, we have concluded the discussion. I wanted to do it very quickly so that you don't have to take too much time on this part, because you guys have very, very limited time to allocate among 3 subjects and get ready for the exam, which is very close around the corner, basically. So I wanted to do a very quick, very rapid discussion, touch on the key points, and even if someone is watching the recording, so that, you would appreciate that you can get it done within a very short period of time and get a good idea of what you have done, what the questions are, what is the answer, and keep doing the mock exams. Okay, right. So with that, I will conclude this answer discussion session.